Good morning, everyone. Welcome to Need Some Dough. So this week, I'm going to talk about the different type of mortgage products out there. And this goes with our theme of breaking down the mortgage process into one piece of information at a time. So today, we're going to talk about the three different categories you should know about: insured, insurable, and conventional mortgages. And the reason this is important is because by knowing which category you fit into, you can compare apples to apples. And that's very important when understanding if you're getting the best mortgage product for you. So if the purchase price of your home is under $1 million and you meet the mortgage insurer's criteria of comparing how much income you bring to the table versus how much debt, then you could qualify technically for an insured versus an insurable mortgage. These are typically the lowest rates out there, and they'll be the ones advertised. What's the difference between insured versus insurable? Well, with insured, you're taking on the cost of mortgage insurance. So those will be the lowest rates out there, right? Because you're taking on that additional cost. With insurable, you're putting at least 20% down, but the lender has the option of purchasing mortgage insurance on your behalf. So again, insured mortgage, you can put down a minimum of 5% down for $500K or less, 10% down for the remaining amount up to $1 million. Once you reach the 1 million threshold, you're no longer able to get an insured mortgage. Insurable, you're not actually purchasing the mortgage insurance yourself, but the lender you're going with has the option to purchase it on your behalf. And finally, conventional mortgages. Conventional mortgages, their posted rates are typically higher, but they're very good for people that need a longer amortization, for example. So they want to spread the payments out over 30 years versus 25, for example, or potentially need a ratio exception. So they don't meet the insurer's typical income to debt ratios, but they can still get into the A space with an A lender, just with a slight exception. So I hope that clarifies things a little bit more. I'm WAGNER-SUES. Feel free always to reach out for questions, and stay tuned for next week's video.